Well, new data shows national auction clearance rates have risen above 55%, but property prices falling, with all eyes now on the RBA ahead of tomorrow's interest rate decision. Well, joining me now is the CEO of Rethink Group, Scott O'Neill. Scott, clearance rates rising there. It's a good sign for some. You're trying to sell your property. That's welcome news. What does it mean overall, though? A lot of sales struggling.
So overall, the market's taken a pretty big hit. Like, from a historic point of view, it's up there with some of the bigger corrections we've ever seen in Australia's history. So, 10% down overall in many parts of the market, some markets more, like the premium ones, etc. But overall, people are a little bit frightened because of the budget and the long-term implications of that. There's obviously more tax going in for the investors, so they've recoiled out of the market. But auction rates are going up. Like you mentioned, the chances the interest rates are probably going to hold. Like the budget, if you look at what the ASX is predicting, there's a 0% chance of an increase. So the budget has done the heavy lifting that was needed to actually get the inflation down. People are basically holding onto their money and not spending, and that's going to... The good thing for property investors and owner-occupiers, there's just less chance of an interest rate rise. So.
Why hold on to your money now? Isn't this a buyer's market as well? Isn't there a chance, an opportunity here, and if prices are falling for the first time in forever, is this the time to jump?
Well, that's exactly right, but that's not how psychology works. Everyone likes to invest when everything's perfect, and that's when there's 10 other people against you on the house. So right now, it's probably one of the best times I've seen to do an owner-occupier purchase. On the investor front, it's probably not so good because the negative gearing side is gone or going. That means you've got to basically, that's going to be more negatively geared to hold the deal. So you need the rents to go up to justify the investment. So two things will happen. Prices will either stabilise in that investor, footprint, and rents need to go up, or a combination of the both, which what really happens. So high level, you're going to see good opportunities for the owner-occupiers because of the stats you just mentioned. And prices are falling. You're getting a better deal than you did at the start of the year. And you just got to find the cash flow from an investor point of view, which could take a bit of time.
On the RBA front, that all-important meeting, which begins today, obviously. We get the results tomorrow afternoon, 2:30. Will they go up or down? Most economists saying they're going to stay flat. Warren Hogan, a respected economist I saw this morning, was thinking they will go up. What are you thinking?
He'll be wrong, I think, if you look at everything that's out there. The next movement will probably be down next year. It's because investors have pulled out, the people are not spending as much. Like, inflation is generally under control. Think about it. If the RBA did cut now, it would destroy the economy. Like, it's not in the best interest, and there's we're already at a decent bandwidth in terms of where the inflation is. It's a little bit too high, but with the house prices falling, that's going to contribute to it'll taper down.
All right. Well, Scott O'Neill, we do appreciate your insight this morning. Thank you for joining us.
Thanks, Chris.